You're listening to the Weekly Wrap-Up on Sprott Money News.
Well, hello again from Sprott Money News and SprottMoney.com. It's Friday, April 26th. This is your Weekly Wrap-Up. As usual, I'm your host, Craig Hemke, and as usual, joining us is Eric Sprott. Eric, good morning.
Hey, Craig, good morning. Actually read a headline suggesting that gold might be up this week, so maybe we can hold it together here. But even if it goes up, it's going up like 0.1% or 0.2%, so it is better than going down.
Oh, you got that right, my friend. We'll take a green candle on the chart over a red candle any day. And, hey, before we get started, I got a little time-sensitive information for everybody out there. We have a flash sale going on at Sprott Money today. You can buy a Royal Canadian Mint gold bar at just $40 U.S. over spot. And the Sprott silver bars at 89 cents U.S. over spot. This is a flash sale. It's a limited time offer, and the sale ends at 3 o'clock Central, 4 o'clock Eastern today, Friday, April 26th. So you got to move fast. Again, Royal Canadian Mint gold bar, just $39.99 over spot. You can go to SprottMoney.com and check it out, or you can just simply call us, 888-861-0775. And like you said, that gold price going up, Eric, even in the face of today's news, where suddenly and magically the U.S. GDP is alleged to be growing at 3% here in the first quarter. The gold price is rallying. I guess maybe we're near a bottom.
Well, I find it funny that, you know, car sales have been weak all quarter, house sales have been weak all quarter. I mean, we did get that surprise, I think it was retail sales report for March, which came out of nowhere. But it's hard to imagine that it's actually growing at 3.2, particularly with the trade wars and every other darn thing that's going on, and these companies that are coming out with, horrendous reports on how their own business is going. So I tend not to believe it. It looks like the market's not believing it. As you and I discussed, the bond market's rallying in the face of it. Gold is rallying in the face of it. So maybe people are getting wise to the looking through the numbers.
You know, and maybe people are going to get wise eventually to what goes on in the COMEX, too. It has been an interesting change in the internal structure. Another Commitment of Traders report coming this week. I know you've been watching that, too.
Well, it was incredible, the change in positions last week. And, you know, you just sit back and wonder, how do they do this? You know, that they somehow engineer the big sell-off, and then they end up being the big buyer. And I don't know how they do it. I mean, who's the guy on the other side here, you know? Like, how stupid must that guy be? But the positions are changing so dramatically. And, I mean, my God, if we ever had this week like we had last week in terms of position changes between the commercials and the technical funds, oh, my God, we'd be so set up for a rally here. And of course, there's lots of reason to think there should be a rally because more and more and more people realize the looseness of various government and monetary policies here. So, and of course, we're seeing a lot of central bank buying. I saw an article that someone was estimating the Bank of India will buy something like 47 tons this year. Of course, they really didn't buy any last year. So there's a new entrant in the market. That's a good piece of the total gold market. We had continual buying by Russia here. I think they bought something like 18 tons in the month of March. So, and they used to buy about 10 tons a month. Now they think they stepped it up to, pushing 20 tons a month. So, the COMEX is well positioned. The irresponsibility of governments on all fronts is becoming more and more apparent. And so I think the path forward for gold should be getting better here, but we got to deal with the COMEX first.
And I think we'd be remiss if we didn't talk about the general stock market being at new all-time highs now, Eric.
Yeah.
It bounced fully back from those lows on Christmas Eve. It's interesting that I've seen the statistics about all of the liquidity that's been created and floated by the central banks to make that happen. It's made the price of crude oil go up by 50% in 4 months from 44 to 66, but yet gold is flat.
Yeah. Well, and, when I look at the market, and a market is made up of stocks, and I mean, I just can hardly believe that every day somebody has a stink bomb comes out about their earnings. I think today it was Exxon, Tesla a couple of days ago, Boeing, 3M yesterday. Of course, Monsanto Bayer is a nightmare. Deutsche Bank, the merger not going through. I mean, there's a litany of major companies and industries that aren't doing well, and yes, the market. I guess the one justification for the market going up. Hey, everyone thinks that the interest rates are going down and or negative, and of course, at negative interest rates, the value of assets goes up infinitely, right, on a relative basis. So I presume that's what's kind of holding things together, but I don't think the logic of lower and negative interest rates just doesn't cut it for me personally. I'd much rather own the hard asset, quite frankly.
Yeah, all part of that war on cash you and I have talked about for years, right? If you can eliminate physical cash, give people no option to withdraw and hold their own money, and it has to be held in the banking system, then you can charge any negative interest rate that you'd want. Seems to be headed that way.
It's kind of bizarre, isn't it? I mean, I can't. My head has a tough time getting around it. You know, you got a bill at the end of the year for the interest you owe the bank.
Right.
For putting money in the bank. Oh boy, yeah, it's a little beyond my mental capacity.
That's where they say we're going, though. All right, my friend. I've actually had a couple of questions be sent in this week. Before we wrap up with our usual discussion of some of the equities and what's going on in the shares, I just had a couple that were sent in. I want to run past you. One person asked if you'd ever heard of a company named Max Resources, trades in Vancouver apparently. They have, I guess, a big discovery in Colombia that they think is a lot like Novo. So with your knowledge of Novo, this person wanted to know if you knew anything about Max Resources.
Well, I don't own it. I mean, I've sort of peripherally looked at it. I think it's gold, platinum, or palladium. I'm not sure, one of the other metals. And I haven't gone there yet. I gather there might be some basis for optimism, but I just haven't seen enough information that takes me there. And quite frankly, I would hardly say I'm a student of it. I'm not a student of it, but it's sort of on my watch list.
All right. Someone also asked about a company called Redstar Gold that they said that perhaps you had owned in the past, and so this person bought some, and then you had maybe sold some, and just wondering if you could provide any other color on that one.
Sure. Well, I made a lot of investments in things that I think have the opportunity to surprise and therefore go up multiples of times. And, of course, lots of those, they do surprise, but they surprise on the downside.
Right.
And I put Redstar obviously in that category. I still own it. Every share I ever bought, I still own. And typically when you buy the kind of positions I buy, you don't get an opportunity to get out, because once you start selling, everyone's kind of all over it. And
right.
So, no, I own it, but it really hasn't come together like we might have imagined.
Fair enough. All right, then finally, again, let's wrap like we usually do. It's been interesting to watch the shares this week. I tracked the GDX. I'm sure you do as well. And it came down within pennies of its 200-day moving average. A whole bunch of support, though, near around 2050. So it looks like it's turning, which is maybe a good sign for the sector as a whole, that maybe, indices like that have turned or bottomed. What are you looking at this week in terms of some of your personal holdings and equities that you follow?
Of course, I focus on Kirkland a lot, even though I'm resigning as chairman. That's effective on March 8th.
May 8th?
And I, just by way of comparison, May 8th, yeah. Just by way of comparison, Agnico, which is a very, very good company, reported their first quarter and they earned 14 cents. And as you may recall, and the stock trades at $58 Canadian, and as you may recall, Kirkland earned, I think it was 51 or 52 normalized earnings in their fourth quarter, and I hope that they do better this quarter because the price of gold was higher. So there's a huge difference between Kirkland trading at 42 and Agnico trading at 58. One guy earns 50 and one guy makes 14. So I'm kind of hoping that when the first quarter results come out, which I'm not aware of what they are, by the way, because they're kind of hands off here. But I kind of hope that the market will reassess the relative values of Kirkland versus their peer group. The only other company I really should comment on is Wallbridge, simply because they reported some of the results from what they call the hole 52. And they basically said, we have something that's 400 meters in strike length and go down to 500 meters, and it's 200 meters thick. And we can kind of put a grade on it, but 200 by 400 by 500 is 100 million tons of material. And at 1 gram, you got 3 million ounces. At 2 grams, you got 7 million ounces, or 6.6. And we're going to find out exactly how big this gets, but I would suggest that it's getting bigger faster. They say there's a 2.5 kilometer strike on it. We've only drilled 400 meters so far. So it could get 6 times bigger just on strike, let alone going deeper. I don't suspect that the width would get much better than it already is. It's pretty incredible having that many shears in a 200 meter zone. So it looks pretty good. I've been a bit of a buyer this week, and the stock hit a new high. Well, it's came off yesterday, but I think it has a lot of promise. So fingers crossed on that one.
All right. Eric, let's just wrap with this, because next week's going to be a really busy week. We've got the FOMC meeting that concludes on Wednesday with a press conference from Chairman Powell, and you know how those things usually go. And then we've got next Friday will be the next employment report already. So it's going to be a crazy week. A lot of folks are going to be talking about rate hikes, that sort of thing. But as you noted, with the news this morning, the bond market's actually rallying. 2-year notes down to 228, and the 10-year note is under 250. So, Fed hikes rates, they're going to invert the yield curve all the way out to 10 years, which I don't think they're going to do.
Yeah.
What do you be watching next week, and what do you suspect will happen?
Sure. Well, it's funny talking about the data. So we had some data this week that the jobless claims rose 37,000 in a week, which is like, how do you believe that sort of stuff? We're under 200,000, and all of a sudden they say there's an increase of 37,000. Like, I'm not believing it, okay? And it's just the numbers are wrong. Like it was like a bolt out of the blue here that all of a sudden the jobless numbers were going up. So who knows what to trust here? Do I trust GDP? No. Do I think that the jobless claims were really 37,000 a week? No, I certainly don't. And you get all these variances with statistically adjusted numbers, and it's hard to believe it all. And so I've always just fallen back on, okay, I know they're going to print all the money. I know the rates are crappy, but we're going to win the day with gold. And, of course, if they can pick the right stocks in the area, you can end up doing very, very well. So that's my game plan.
Yep. Physical gold and physical silver in the hand just about beats just about everything else. Hey, and before everybody leaves, at the conclusion here of this podcast, please check out here on the Sprott Money page our Ask the Expert series. The expert here this month in April was Josh Fair, who is the CEO of the Scottsdale Mint. He joined us to discuss the mergers and acquisitions in the mint industry and other current dynamics for the precious metals. You want to make sure you listen to this interview on SprottMoney.com. It's fantastic. And you can also find Scottsdale Mint products here at SprottMoney.com as well. Eric, thank you so much for your time again today. It's always insightful to listen to you, and I hope you have a great weekend.
Hey, all the best to you too. Look forward to next week.
And from all of us at Sprott Money News and SprottMoney.com, thank you for listening. We'll talk to you again next Friday.